brave man, in fact. He's buying right into the cliff and looking at a stock that would be directly impacted if we don't get a deal. Let's bring in Neel Kashkari, head of global equities at PIMCO. And this pick, Neel, highly leveraged to an area that would face sequestration and also a consumer that could be constrained.
Sure. So first of all, thanks for having me. It's great to be here. General Dynamics is one of our core holdings. We've owned it for a while. We continue to be bullish on the stock. General Dynamics is a great defense company, on top of which you're getting one of the best ultra-luxury good manufacturers in Gulfstream at the same time. Now, as you all have been talking about, we think at the last possible moment, after Republicans and Democrats have exhausted every other alternative, they'll do the bare minimum and kick the can down the road on most of it. We don't actually think sequestration is likely to hit. We think General Dynamics business is a strong business with the business airplane sector, a lot of exposure to emerging markets outside the U.S. Their tech services business is doing well. Even their combat and marine divisions, we think, are going to be more resilient than people are giving them credit for. And they've got a blue chip balance sheet, very strong balance sheet, low debt levels, strong cash generation, around 10% free cash flow yield, and trading at around 10 times earnings right now. So we like its long-term fundamentals. We don't think it's a short-term flip. But again, we think that Republicans and Democrats will kick the can down the road. And remember, the fiscal cliff is not really a cliff. Even if we come to January 1st, it's more of a hill. And they actually have a little bit more time than people are giving them credit for. And that's why I think the markets are not overreacting right now.
And there is this notion that you can go over the cliff and then you can sort of go back, grandfather it in. But at the same time, for a company like General Dynamics, at what point will they actually feel, even if it's just 1 month's worth of sequestration, at what point do you start getting concerned that it will, in fact, at least impact that quarter?
Well, that's a very good point. It certainly could impact a quarter if it goes for weeks or months, absolutely. And I think maybe even the bigger factor is, I think you talked about it, which is there will be volatility as we approach the cliff. And if we go over the cliff, even if it's for a few days or a few weeks, there will be a lot of volatility in the markets. That could be buying opportunities for all of us that have some dry powder for which to deploy. Again, I've talked to you about this before. We tend to be more long-term holders. We tend to buy stocks and hold them for years rather than weeks or months. And for us, General Dynamics is a good long-term holding because we don't think that defense spending cuts are coming anytime soon.
Neel, it's Karen. Let me ask you something. So do you then look at GD as already pricing in a very bad case scenario? Is that why it's attractive here?
Well, we think it's somewhat pricing in, again, somewhat pricing in the fiscal cliff. We think it's a good long-term story. So even absent the fiscal cliff, we own General Dynamics. We've owned it for a while before concerned about the fiscal cliff arose. The fact that there are those concerns right now makes us even more optimistic on the story long-term in terms of a buying opportunity now. And we're just watching what's happening in Washington very closely, as all of you are. Again, Republicans and Democrats, we don't have a lot of confidence that they can show real leadership and solve our long-term structural challenges. But we think at the last possible moment, they'll do the bare minimum that's required of them, and that means kicking the can down the road.
Neel, if I expand this out, and can I buy a Lockheed off of this? Should I get back into high dividend payers? Should I get back into utilities? Because all of these charts look the same. They bottomed out when the market bottomed out, and now it looks like everyone has discounted fiscal cliff, and it looks like they're getting back to business already. Should we be buyers of pretty much everything then?
Well, we're being very selective. I think some of you talked about this earlier. We're being very selective in the names that we're buying. We're not just broadly buying the market. We think the stock market overall is reasonably priced, but we're not seeing big catalysts for PE expansion from here. So we're being selective on a name-by-name basis. We are buying dividend stocks all around the world. We tend right now to prefer dividend stocks outside the U.S. They are not as rich as some of the dividend stocks inside the U.S., the traditional dividend sectors. And the dividend stocks abroad are going to be less vulnerable to dividend taxes going up because more of their shareholders are not exposed to U.S. dividend tax rates. So it's a name-by-name basis, and we like General Dynamics in part for its own defense business, but also we think Gulfstream is a very attractive asset that has a lot of exposure to the emerging markets with a big backlog.
Neel, I'm just wondering, in terms of whether we go over the fiscal cliff, I was speaking to Dr. Alan Blinder of Princeton this morning, and he said if we go over the cliff for even a matter of 2 months, we could see unemployment tick as high as 11%. And even though you're a long-term investor, at some point you may look at the macro environment and say it's time to get small, it's time to reduce some positions. At what point do you reach that tipping point?
Well, that's a great point, but I'd be very surprised if 2 months of going over the fiscal cliff results in an unemployment increase from 8% to 11%. That doesn't, I find that hard to reconcile. I mean, clearly, if we go over the fiscal cliff and there's no deal, for the course of the year, we will absolutely be in another recession. No question about that. But going over the cliff for a month, it will hurt confidence. It will keep businesses on the sidelines. It will keep investors on the sidelines. It will hurt the economy. It's not a good thing, don't get me wrong. But going from 8% to 11% unemployment for 1 or 2 months of fiscal cliff, that sounds awfully extreme. I think that if there's absolute gridlock in Washington, and right now Washington seems to be on another planet. All of us in the markets, people at home, people around the country want Republicans and Democrats to work together. Everyone seems to want that except for Republicans and Democrats. And so if they really are as far apart as they seem at times, then yeah, we could shoot ourselves in the foot, do something really, really stupid, but we don't think that's really going to happen.
Neel, John Najarian, I think most of us wish that Washington were on another planet and that we could just take the whole group and ship them there. Since we can't do that, however, I think if we do get 2 weeks or a month worth of argument that results in the fiscal cliff being fallen off, that we fall off the cliff, then I think you are going to start seeing layoff notices and the rest. So unfortunately, I would say we're going to accelerate that unemployment and the job loss, unfortunately, if that happens, and that's going to result in warnings going forward from all the major industrial companies as well. That's what I hope Washington is listening to, and that's why I hope they turn away from that.
Absolutely. Look, I agree completely. I was more debating the magnitude, 8% to 11% versus the direction. The direction is clearly negative. We're hoping that this does not take what happened in the TARP. Remember, the House voted the TARP down the first time. The Dow then dropped 777 points, and then Congress got the message that they needed to act on behalf of the U.S. economy and behalf of the American people. We absolutely hope it does not come to that. Every business leader across the country, small business to large business, is telling Washington, both the executive branch and the Congress, come together in a bipartisan manner and get a deal done. Everyone's saying it. For some reason, they don't seem to be hearing it.
Neil, we're going to leave it there. We got some breaking news. Neel Kashkari of PIMCO. The breaking news here concerns Netflix. Netflix received on December 5th a Wells notice regarding the violation of Regulation Fair Disclosure.